So stockholders' equities, common stock issued to investors. Payments made to stockholders, dividends. What's cleaning services provided to customers?
Revenue.
And then workers' salaries for the current period,
Expense.
expense. Angel, hi there.
Hey.
So what we're doing, guys, we're actually measuring activities. We're taking activities and measuring, where do they fit? So this is going to be one of the first problems we're going to work on. Prepare an income statement. On December 31st, Fighting Okra Cooking Services reports the following revenues and expenses. So when we work, actually, this is a little too early. I don't know why that's happening. Let's not worry about that one right now. Okay, let's do something else here. Excuse me one second. I'm going to get into something else. I'm going to get into another PowerPoint. Sorry, I like this one better. I apologize for that. Okay. So let's see where we were at. We were there, we did that. Did those. Okay, we did that. Okay. So let's look at this problem. Here we've got transactions. We know the accounts, we see the accounts we're going to use, and we have to decide what the account classification is. So the account classifications being assets, liabilities, stockholders' equity, revenues, expenses, and dividends. So when we receive cash from customers and we're going to record the account as cash, what kind of category do you think cash is? It's an asset. Isn't it an asset? It's a resource. So it's a, here, let me, excuse me. So revenue is when we earn money, but cash is a resource, which means it's an asset, isn't it? When we provide services to customers and we link what's called service revenue, the category is going to be revenue. When we purchase supplies, what are supplies? Supplies are a resource, right? And so that is an asset.
Mm-hmm.
When we purchase a factory for operations, that's a building. What's a building?
An asset.
It's an asset that provides us with a future benefit for many years. The cost, to pay for the cost of advertising, we call this advertising expense. The category is an expense. I'm going to give you the hint about expenses. They will always have the word expense after them. Okay, easy. When we purchase equipment for operations, what is equipment?
Asset.
It's a resource, so it's an asset. An asset is a resource that will provide us with a future benefit. It's going to usually last longer than a year. When we pay for the cost of interest, it's called interest expense. Therefore, it's an expense. When we purchase supplies on credit, which means we get the supplies, but we haven't paid for them yet.
It's payable.
We owe somebody something, don't we?
Mhm.
It's called accounts payable. Anything with the word payable after it is
Liability.
always going to be a liability. Okay? When we distribute cash to stockholders, dividends are the same category dividends. So the account and the account classification will be the same there. And then when we borrow money from a bank, it's a notes payable, which is a liability. Two things to be aware of here. If it's a liability, it's going to have the word payable after it. Until next week, I'm going to confuse you, and there's one kind of payable that doesn't have the word liability after it, but we're not going to deal with that till next week. And if it's an expense, it's going to have the word expense after it. Okay? Now, there's three primary business types of structures in the United States. A sole proprietorship is just a business owned by one person. Partnership is two or more people, and a corporation is a legally separate entity. Know that there are the largest number of businesses are sole proprietors. They don't make the most amount of the money, corporations do. But if a quiz question asks you, what are the most kind of businesses in the United States? It's a sole proprietor. Who brings in the most revenues? Corporations by far. Okay. Now we're going to talk about another piece. We're going to talk about various business activities. Business activities are, as we talk about receiving services from customers or borrowing money from the bank, every activity a business conducts can be broken down into three types of activities. One is financing, transactions the company has with investors and creditors, borrowing money, receiving stock from a stockholder, okay, paying dividends, paying the loan back to the bank. Those are all financing activities. Investing activities are transactions involving the purchase and sale of resources or assets that provide benefit for several years. Purchasing land, selling land, purchasing equipment, purchasing a building, selling a building. Those are all long-term assets. They're investing in those long-term assets. Therefore, it is an investing activity. All the other activities will be operating activities. Operating activities are why the business is in existence to begin with. Operating activities would be receiving revenues from you paying your tuition. Operating activities would be purchasing books at the bookstore, paying the utility bill, paying the insurance for the building. Do you understand what I'm trying to get at? The reason the company is in existence. All activities related to that would be operating activities. So financing is issuing stock or paying dividends to shareholders or borrowing money. Investing, purchasing assets. operating, buying inventory, paying bills, and paying employees. Any questions? So here we have various types of transactions, and we are going to decide, is it a financing activity? Is it investing? Or is it operating? So borrowing money from a bank, what do you guys think?
Invest. Financing.
Financing. You guys agree? Provide services to customers.
Operation.
Operating. Issue common stock to investors. Financing.
Financing, yeah.
Purchase land. Investing.
Investing.
Pay rent for the current month.
Operating.
Operating. Pay dividends to stockholders.
Financing.
Financing. Purchase a building.
Investing.
Awesome. Is it clicking? Kind of? A little?
Hey, y'all two, quit it out.
Angel, that was too cute. I kind of muted you, so we didn't have to.
I'm
do
so
that.
sorry.
Hey, it's
I thought I did
okay.
that.
It's okay. At least at my house, it would have been my husband and I screaming.
Those are my dogs.
I know, it just was dogs, not humans. Okay, guys, now for each transaction, indicate whether the related account would be classified in the balance sheet as an asset, a liability, stockholders' equity, or in the income statement as a revenue or expense, or in the statement of stockholders' equity as a dividend. Okay? Oh, that's weird. So I think we did that part already. Okay, if this is the one we want to do. We're going to look at, did we do this one? No, we did not. Now, we're going to look at this one and look at the transaction and decide, is this going to be investing, financing, or operating? I'm going to give you a couple minutes to just kind of look at it and see what you think, okay? To see if you're on track, and then we'll go over it. Okay, pay for advertising. What type of activity is that going to be?
Operating.
Operating. Sorry, now you got them all. Pay dividends to stockholders. Financing.
Financing.
Collect cash from customers. Operating. Purchase a building. Investing. Purchase equipment. investing. Sell land, investing. Remember,
Oh.
investing is the purchase and the sale of long-term assets, okay? Receive a loan from the bank, financing. Pay suppliers for purchase of supplies, operating. Provide services to customers, operating. Now, this one can be tricky, so I want to explain this last one to you. Invest in securities of another company. Think about it. This isn't stockholders investing in your company. It's a company that's investing in another company. So it's a long-term asset, which is why it is investing, okay? Transactions related to the primary business activities of a company, such as selling goods and services to customers, are referred to as
Operating.
operating. Transactions of a company that include the purchase and sale of long-term assets are referred to as
Investing.
investing. Now, we talked about taking activities and measuring them. And then we're going to take all these activities we've measured and we're going to put them into financial statements. Financial statements are periodic reports published by the company for the purpose of providing information to external users. The 4 financial statements we are going to talk about include the income statement. Remember, what's in the income statement? Revenues minus expenses. The statement of stockholders' equity, the balance sheet, and the statement of cash flows. An income statement measures revenues and expenses over a period of time, usually monthly, quarterly, or yearly. If revenues are greater than expenses, that's what we want. If revenues are less than expenses, it's not what you want. But it happens. Know that the income statement compares revenues and expenses for the current period to see if the company's ability if they can earn a profit. Guys, if a company cannot continue to earn a profit, they're not going to be in business, are they? You can't make it. Who's going to invest in you? The statement of stockholders' equity summarizes the changes in stockholders' equity over an interval of time. The stockholders' equity section consists of common stock and retained earnings. Common stock is when stockholders are issued stock in the company, comes externally. Retained earnings is the internal source, which means it's all the revenues or the net income minus the dividends that are paid out that a company has earned over its lifetime. So we're going to look at this problem right here. I wish I could find a way to minimize this screen. On December 31st, Fighting Okra Cooking Service reports the following revenues and expenses. The first thing we're going to do is provide an income statement. And we know that an income statement has revenues and expenses, and that's it. If it's a revenue, it's going to say revenues. If it's an expense, it's going to say expense. So to prepare an income statement, we are going to show the revenues. We only had one service revenue of 75,000. And then our different expenses. We had salaries expense of 24,000, supplies expense of 14,500, rent expense of 10,600, legal fees expense of 2,400, and postage expense of 1,500, for a total expenses of 53,000. Do you see here our 75,000 of revenue minus our 53,000 in expenses, give us our net income? Does that make sense? Next, we're going to learn about the statement of stockholders' equity. The statement of
I have a question.
stockholders' equity lets us know what the beginning of the balances were for the year, what happened during the year, and then what the ending balances are. So we received some information that said the balance of common stock at the beginning of the year was 200,000. That's why we're putting it here. It said the balance of retained earnings at the beginning of the year was 32,000. That's why we're putting it there. During the year, the company issued additional shares of common stock for 25,000. Guys, guess where we're going to put that? Right there. And then it says, and paid dividends of 10,000, which we're going to put here. But we need to add our net income. That net income will come from the income statement. That's why you always do your income statement first, okay? You always prepare your income statement first, then you prepare your statement of stockholders' equity next. Because you see, we need this 22,000 from our income statement to finish up our statement of stockholders' equity. We need the dividends. Remember, dividends are a minus, okay? To finish up our stockholders' equity. So the common stock shows the beginning balance plus any issuance of common stock. The retained earnings section has a beginning balance. We add our net income and we subtract our dividends to come up with an ending balance. Okay. Now, I want you to see something. Do you see this ending balance? Common stock and retained earnings. The combination equal stockholders' equity. And do you remember our accounting equation? Assets equal liabilities plus stockholders' equity. The balance sheet is the next financial statement we're going to talk about. The balance sheet is just like the accounting equation. Assets equal liabilities plus stockholders' equity. I like to tell people it's like a snapshot. It's like a picture. So it's at one moment in time is a balance sheet. Think of it this way. On December 31st, a company may have 50,000 sitting in cash. But on January 1st, $20,000 worth of checks might have just cleared the bank, and now they're down to 30. As banks, balance sheet is a snapshot in time. It's going to change before and it will change after. Okay, it's just one moment. Here we're going to look at creating a balance sheet. So we see Gator Investments provides financial services related to investment selections, retirement planning, and general insurance needs. At the end of the year, on December 31st, 2024, the company reports the following amounts. So we've got revenue, expenses. We've got an asset here, which is a resource. We've got a liability, says a payable. See how we have all these figures? In addition, the company had common stock of 100,000 at the beginning of the year and issued an additional 11,000 during the year. The company has retained earnings of 30,300 at the beginning of the year and paid dividends of 5,200. The first thing we're going to prepare is an income statement. Then we're going to prepare a statement of stockholders' equity. Then we're going to prepare a balance sheet. Okay? So our income statement is going to be our revenues and our expenses. Okay? That's the only thing in an income statement, our revenues and expenses.
Ms. Schumake.
Yes, dear.
So I just want to make sure I'm clear. So basically we're pulling all of the information from the first two statements and we're getting some of that information and putting it in here?
This is a new problem.
Okay.
So we will be doing that with the balance sheet, but right now for the income statement, we are looking at the various accounts up there. And we want to pull any accounts that are revenue accounts and any account that are expense accounts, and that is it. Because an income statement only has revenues minus expenses. Okay?
Okay.
Questions, guys? Good? Oh. Good, bad, indifferent? They're sleeping here, Angel. So that, I'm joking.
Once we do the homework, I think it'll sound better because we can be able to work with it ourselves.
Yes. So we've got our revenues minus our expenses. We've got our net income. Now, guys, we're going to need that net income in order to do our statement of stockholders' equity. It tells us the company had common stock of 100,000 at the beginning of the year, which is here. And it had retained earnings of 30,300 at the beginning of the year, which is here. It tells us they issued an additional 11,000 during the year, which is here. Our net income came from the income statement. And it says it paid dividends of 5,200. Remember, dividends are always a minus. We pay it out, it's reducing. So do you see here, these are our ending balances. We're going to need these ending balances to finish our balance sheet. Now for the balance sheet, guys. What are our resources or assets? I see cash. I see a building. I see equipment. Those are resources. We're going to put assets and they total 182,500. What does the accounting equation say again? Assets equal liabilities plus stockholders' equity. We're going to derive the common stock and the retained earnings from this previous slide here. 111 and 35.1. You see that? 111, 35.1 equals our stockholders' equity. One thing we know about liabilities, they have the word payable after them. Accounts payable, 6,400. Notes payable, 30,000. Our total liabilities are 36,400. Our total stockholders' equity is 146,1. We combine them, 182,5. Do you see that our total assets equal our liabilities plus our stockholders' equity? That's how you know you have it right. They have to balance. Okay. I'm not going to worry about that one right now. The next or the last financial statement is what we call the statement of cash flows. It only measures activities involving cash, bringing in cash inflows and cash outflows. Remember those three types of activities: operating, investing, and financing? We break down the statement of cash flows based on those three activities. So here are various activities that happened during the year. Cash received from the sale of products to customers. What would that be? Operating. Cash received from the bank from a long-term loan. What would that be? Financing. Cash paid to purchase factory equipment.
Operating.
Investing.
Oh.
Because remember, factory equipment's a long-term asset.
Oh, yeah.
Cash paid to merchandise suppliers. Operating.
Operating.
Cash received from the sale of an unused warehouse.
Operating.
The purchase and sale of long-term
Investing.
assets is
Investing.
investing. Cash paid to workers. Operating. Cash paid for advertisement.
Operating.
Operating. Cash received for the sale of services to customers.
Operating.
Operating. Cash paid for dividends to stockholders.
Finance.
Financing. So if we had cash at the beginning of the period of 5,000, and we put all the ins and outs together, we have a balance at the end of the year of 37,000. But what we're going to do now is we're going to take these various activities and separate it under operating, investing, and financing. Again, inflows will be from the sale of products to customers and services to customers. Those are cash inflows. Operating cash outflows would be for merchandise suppliers, for workers, and for advertising. That's money going out. And then you have your net cash flows from operating activities of 30,000. Then we have cash flows from investing activities. Purchasing factory equipment. You use money to purchase factory equipment. It's an outflow. The sale of the warehouse is an inflow. That net cash flows from investing is a minus 37,000. Cash flows from financing, borrowing money from a bank, and paying dividends. You see the net cash flows from financing activities is 39,000. The net increase in cash is the 30,000 minus the 37,000 plus the 39,000 gives us net increase of 32,000. If we take the cash we had at the beginning of the period of 5,000 That means our cash at the end of the period is going to be 37. Okay? And that cash should match up with the cash on the balance sheet. Do you see how all the financial statements work together? So here we can do one. We've got assets. We've got liabilities and stockholders' equity. And we've got inflows and outflows. To come up with a balance sheet, we're going to take our assets, put them here. Our liabilities have one thing in common. What are they? They were payable. And then we have our common stock, our retained earnings, gives us our total stockholders' equity. Our assets will always equal our liabilities plus our stockholders' equity. Does that make sense, guys? Then to do a statement of cash flows, we're going to separate out the operating activities from the investing activities from the financing activities. Remember, all transactions that affect revenues or expenses get reported in the income statement. Ultimately, the income statement is going to affect the balance sheet through the statement of stockholders' equity, which flows back to the balance sheet. Any questions? We've got one small piece to go, and then we're going to take a look at the homework, and we're going to go through it all together. Okay. So we know that the role of accountants is to provide that link between investors and companies in measuring activities and communicating those activities through financial statements. So, GAAP. Well, let me speak for accounting. To make sure that all companies measure activities the same, we have an organization that develops the guidelines or the rules. These rules are called generally accepted accounting principles. And what we have to do is everybody uniformly needs to adhere to GAAP, generally accepted accounting principles, so we can compare one company to another. That's why we have GAAP. Whoops. So we know that investors and creditors use this information to make decisions. But we need to all be common across the board, which is why all accountants must adhere to generally accepted accounting principles. Now, the United States has an independent board called FASB, the Financial Accounting Standards Board, that create GAAP. Internationally, there's an International Accounting Standards Board. But in the United States, we use GAAP, okay? The rules of financial accounting are called generally accepted accounting principles. Remember that, you'll see it again. FASB, the Financial Accounting Standards Board, is an independent body that has responsibility for establishing GAAP. Companies do hire auditors to make sure they're following GAAP. And you guys can look at that a little more on your own, but I'm not going to really put a lot of work into telling you about that. One thing you do want to pay attention to is there are various guidelines to make sure financial statements can be relatively inexpensive. So we need to make sure we have cost-effective constraints in providing GAAP. This conceptual framework basically means each entity, their financial statements are calculated on their own. Each entity prepares their own financial statements. We use the dollar, the monetary unit means. In the United States, we use the dollar as the means to determine financial statements. Periodicity means when we prepare financial statements, we prepare them for a period of time. It might be a month, it might be a year, but it's for a period of time that we provide that information. And we assume that each company we're preparing these financial statements for will continue operating in the near future. Okay? These are underlying assumptions we use as accountants when we provide financial statements. Okay? So that is the gist of chapter 1. What I'd like to do now is go through the homework to see if it's clear with you. And then I'm going to provide you with the quiz. Okay? But before I do that, I need to make a seat chart. Has anyone got a chart going, or should I just do it like this? I think I'm just going to do it here. I'm just going to need to get y'all's names again, and I'm so sorry. What is your name, sir?
Marco.
Marco, and your last name? UL. Okay, and your name?
Iman.
A
I-M-A-N.
I-M-A-N, and your last name?
E-L-S-A-W-A-N. Alpha.
Thank you. Okay, and sir, I'm kind of going up the rows. Your name?
Alexander
Martianis?
Martinez. M-A-R-T-I-A-N-O-S.
Thank you. Your name?
Me,
Yes.
Shandon, S-H-A-N-D-O-N.
Last name?
Shannon, S-C-H-A-N-N-A-U-T-R.
Thank you. Okay, and then,
Jesse, J-E-S-S-E, and then turn this T-R-I-Q-U-I-S-T.
okay. Jesse, are you in the military?
Yes,
You sent me, you were so kind. And did you get my email back?
I did, yes.
Okay, and up there,
Austin, and then my last name is L-E-A-R-N-E-D.
thank you. And
And then Lyson, L-E-Y-S-U-N.
and your first name?
Grant.
Grant, I'm sorry about that.
Hassan, and then my last name is A-L-S-A-L.
Okay,
Christina.
K or C?
C.
C-R-I-S-T-I-N-A, last name?
Meyer.
Okay, thank you.
Joshua,
I'm just, okay, Joshua,
yep, last name Jendro, J-E-N-D-R-O.
thank you.
Brianna.
Last name?
Ward.
Thank you. Okay, and behind Christina?
Hunter. Laughlin, L-O-C-L-I-N-G.
Thank you. And last but not least,
Abby.
Abby,
Might be Abby.
how do you spell your last name?
E-R-I-C-K-S-O-N.
Erickson. Okay, did I get everybody? So I have my little seating chart. So guys, if you happen, God forbid, to get COVID, will you please notify me? Just so respectfully, we can let people in the classroom know. So I have a, I have a sister who's a nurse and her husband's a physician, and they have never had COVID for this whole time, and they see people all the time. On Friday, Bud was giving someone medicine for their mother. He was outdoors down in Louisiana, 6 feet apart, talking for about 10 minutes. He got COVID. She has COVID. So, I mean, it's like, it's crazy how contagious this stuff is. So we want to just be careful, okay? Any questions? Are we good? And I don't by any means want to make anyone fearful, but just email me if something like that happens, okay? Ready for homework? Angel, you ready for homework?
Absolutely.
Okay. So what we're going to do now is we're going to go through the homework. Now, again, the one benefit, if you're in here, oh, what is it? No. Let me find. Sorry, I got to figure out my passwords.
Quick question.
One sec, sweetie. I'm trying to find my password. I'm pathetic. Yay. Yes, dear. Yes.
The recharge on the homework, on the practice review, that's just for us to do it over again if we want to.
Only if you want to. Here's the deal. I do grade the review just because I think it's beneficial. So it's a 10% of your grade. One thing I do want to mention to everyone, I don't allow late assignments. Now, there are some exceptions to that. Military, absolutely. If you have COVID, I will do anything to help you because it just sucks. But I partied too much this weekend and I can't get my grades in. Get it? That kind of stuff. So I allow 2 drops for reviews, 2 homework drops, and 2 quiz drops. What does that mean? It means you don't have to turn in 2 homeworks, 2 reviews, 2 quizzes. Or if you do them all, the 2 lowest of your grades get dropped. I do that in lieu of allowing late assignments, okay? I had a person last year who was in the hospital with COVID. Of course, I'm gonna allow that. But just know as a guideline, I don't allow it, okay? So, and I hate to be mean about it, but that's why I allow for 2 drops with each one. Got it? Plan ahead. Don't wait till the last minute, because guys, if you wait till the last minute, inevitably something will go wrong. I was working on Christmas quilts. We had Christmas on Monday at my house. What am I doing? Doing the 2 grandkids' Christmas quilts right before they're coming. I put a needle through my finger. If everything could go wrong, it did. I'm down there cussing and screaming. Whose fault was that? Mine. I wait till the last minute. Get it? Try not to wait till the last minute. So know that for next week, you need to complete the review by Tuesday night. I am going to give you until Tuesday or Monday night to make sure you get that review in for this week. Okay? Homework. I'd like to go over the homework. Everybody has the exact same homework. Nothing is different with the homework. Now, there's two things I want to tell you. We can take our time going through this. Oops. But what I'd like to say to you is to get the right answers, you may take a picture. Do you see what I'm saying? With your phone to make sure, you know, if you want the answer, the solutions, take a picture on your phone or type in real fast, however you want to do that. But here is the homework. It's very similar to what we did in class. Select the type of business activity, such as financing, investing, or operating for each transaction of Hewlett Packard. Pay amount owed to the bank for previous financing or for previous borrowing. Wouldn't that be financing? Pay utility costs. Does that make sense? It's operating. Purchase equipment. What is equipment? It's a long-term asset. So what would that be? Investing. Provide services to customers. Operating. I'm going to show you something real quick so you understand. Let me get into the student view. And I just want to show you how this works. You have unlimited attempts as many times as you want to get this right. Pay amounts owed to the bank for previous borrowing. I'm just going to say this is operating. Okay? But I want to make sure I'm right because I know I'm right. See what it does? It's going to let you know you're wrong. So it allows you the ability to check your work and to come back and do it the right way. Purchase equipment to be used in operations, investing. Provide services to customers, operating. Purchase a building. What do y'all think? Purchasing the building? Investing. Pay worker salaries? Operating. So guys, I can check my work to see what I've gotten right. Okay? So here is the first one, similar to everything we have already gone through in class. Do you need to take a picture of that? You good? Next. For each transaction, select whether the related account would be classified in the balance sheet as an asset, in the income asset, a liability or stockholders' equity, the income statement as a revenue or expense, or as a dividend. We did things similar to this, okay? Tell me when I can move on. I want to give you the opportunity to get your information. Can I move on? My best advice is to take screenshots just in case you know what I'm saying? Next. Now, Longhorn Corporation, they give you various accounts. They tell you the common stock at the beginning of the period. Your job is to prepare an income statement, then a statement of stockholders' equity, then a balance sheet. Do you see? I'll go back and give you more time here. Do you see? You've got 3 different requirements there. Don't forget that. Okay, that I don't want you to miss one. Okay, here's your income statement. Guys, you will get a problem if you don't total your expenses. I'm just kind of letting you know where I have seen problems in the past. Statement 2. Is this big enough for you guys? Balance sheet. Here, let me just, yeah, that's good. Okay. Next. This is important. I want you to be aware of this. And I've got to show it this way so it makes sense to you. Many people get this screwed up. So I want to explain what you need to do here. Actually, we're going to work on this together. Do you see how there are missing amounts on this income statement? And the honest truth is you could not figure this out if this is all you have. But guys, what do we know about net income? Where does it go to?
The balance sheet.
It ends up going to the balance sheet, but it goes to the statement of stockholders' equity, doesn't it? Do you see how we have to add net income in here?
Oh, yeah.
But we don't have the net income figure, but can't we figure it out? What is the net income figure? What should it be? We have the beginning balance, we have what the dividends are, and we have the ending balance. So shouldn't we figure out what net income is here? What is it?
So you do common stock minus retained earnings, but are you doing the retained earnings for the 2,800?
So what we need to do is just this retained earnings section. We have
Okay.
all the information we need to fill in net income.
So it's 4,000?
Is it 4,000? No,
Then it's.
should it be 5,300?
53.
Anyone help me? 5,300? $5,800, right? Is that right?
How do you get that?
How do we get that? Anyone, can you help me? Yes,
I was about to ask if we just subtracted from the dividends in the beginning balance.
correct. Well, you take the beginning balance less the dividends, that gives you 4,000. 4,000 minus the ending balance of 9,800 gives us, we have to have 5,800 in our net income, don't we?
Okay, yeah.
We have to have that to make it work. So our beginning balance plus our net income minus our dividends should equal 9,800. Now to make this work, I need to go over here and put in my 5,800, right? Or maybe that happens on its own. I guess it happened, but it seems like I should be able to have to put something in there. Anyway, so now I have the net income to bring back up here. Do you understand what I'm trying to tell you?
Mhm.
If the net income has to be 5,800, shouldn't I be able to figure out what my salaries is?
Yeah,
What would they be, guys?
it would be.
What do you think?
Advertising. 10,000.
Anyone?
Would it be 28,000? No, because you want to get 5,800. Sorry.
Come on, guys.
Revenues minus expenses equals.
Why
Okay.
can't
yeah.
I number lock 20?
16.
6?
76.
Right? We received the net income of 5,800 over here,
Mhm.
okay? We received the net income of 58 from the statement of stockholders' equity. Therefore, once we have that, we can plug in what our salary should be. Does that make sense? This can be the most tricky question, which is why I'm trying to help you with it. Okay, then from
So-
there, you're going to figure out your balance sheet. Well, guys, don't you know that your ending common stock is 11? Your ending retained earnings is 9,800. Shouldn't that help you?
Plug those in.
Make sense? To help
Yeah.
get your information. Okay, let me go back to okay. Then we have all this information. And again, you're going to prepare an income statement. You're going to prepare a statement of stockholders' equity. And you're going to prepare your balance sheet. Then this last one, those various assumptions that we talked about at the end of the PowerPoint, you have to look at these and decide which assumption was violated. So I'm giving you the answers, but please go back and make sense. At least you have the answers to help you see if you're getting it correct or not. Then the last question here is various definitions. Okay, so this homework should be fairly straightforward. If you have questions, you can go to those discussions for chapter 1, put in your question, and have other students work with you. Okay, because if you're not alone. If something is unclear to you, chances are it's unclear to many people. Okay, guys, yes.
Can you go back to the first one on page 5?
Number 4. Or number
This
1.
one here, guys.
One.
Yeah.
Not that
Okay, I'm printing them real quick, Angel. You get it, girl. Okay.
Yeah.
The first one.
one. 5, please.
Oh, I'm sorry. Yes.
That one's pretty easy. Number 5.
Here's number 2.
I got everything else besides that.
Okay, so now what I'm going to do is I'm going to show you the homework. Now, please understand that the homework does consist of pools of questions, but the questions are going to be very similar to this. So you're going to have a couple fill in the blanks, and then you've got 10 multiple choice. You have 2 times to complete it. I always take the highest score. 90 minutes a time. Everyone has 2 chances at completing the quiz. These will not be the exact kind of questions, but they're very similar. But I want to give you an understanding of what the quiz is like. A company provides low-cost tax advice in preparation to those with financial need. At the end of the current period, the company reports the following amounts: assets, liabilities, revenues, and expenses. They want to know the net loss. Here's the key. How do you figure out the net loss?
Assets equals
What?
minus.
Revenues minus expenses give you net income or net loss. Exactly. So these questions are meant to see if you understand where you get net income. You get net income from revenues minus expenses. How about this one? Assets equal
Liabilities.
liabilities plus
Equity.
stockholders' equity. If they give you assets and liabilities, isn't that enough to figure out stockholders' equity?
Absolutely.
Make sense? I'm trying to help you see how to figure this out. Then, next question. They give you revenues and expenses. You have to prepare an income statement, right? Then they want you to prepare a statement of stockholders' equity. Guys, identical to what we're doing in class. Okay? Next. Prepare a balance sheet. The key here is you need to know what are assets, what are liabilities. Now, guys, it's going to trick you. There is one account in here that does not belong. A balance sheet is made up of assets equal liabilities
Stockholders' equity.
and stockholders' equity.
Payable, expense payable.
What
Yeah.
items in here are assets?
Land, equipment,
Cash.
oh, yep, cash.
Guys,
Oh,
what is service revenue?
money that a customer paid. for-
Revenue.
Yeah.
It doesn't belong in here. That belongs in an income statement, doesn't it? Do you see how they're trying to trick you? They're trying to make sure you understand revenue is revenue in an income statement. It doesn't belong here. Guess what's going to happen if someone puts in revenue?
Mm. Yeah.
Giving you a hard time. Okay, does that make sense what I'm trying to tell you?
Mhm.
You're going to complete a statement of stockholders' equity. They tell you here, revenues equal 24,200, expenses are 16,600. What would net income be? Wouldn't it be the difference?
Yep.
So they've got different things for you to follow here. Again, you'll prepare another balance sheet. Statement of cash flows. Fill in the blanks. Statement, your financial statements again. Then 10 multiple choice. So the multiple choice are pretty straightforward. You can use your book. You can use your notes. You just can't use another person. Just so you know, the quiz is proctored. What does that mean? You have to have a camera on your computer. They're just trying to make sure you're the one taking the test. Someone emailed me and said, is it a problem if I have notes? Of course, it's not a problem. You can use your book. You can use all the notes. You can use another computer. You have to be the one taking the test. Does that make sense?
So it's okay if I have my phone. in my hand.
Of course. I'm letting you all know you can use any resources. I just don't want someone else taking your test.
And this is due Monday, right?
Correct. Here's the next thing, guys. Make sure that you that your computer's prepared ahead of time. And don't wait until 11 p.m. that night, and then all of a sudden you realize you don't have a camera. Okay? Sorry, guys, I need to get y'all going. Any questions? How's everyone doing?